Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. We're coming out of a record-breaking week, a historic precedent set by Fed Chair Powell at Jackson Hole, talking about average inflation targeting. The S&P went out above 3,400 and ran more than 100 points last week. Opened higher last night, and today we had the stock splits. Apple as well as Tesla. Apple 4-to-1 split, Tesla 5-to-1 split, and those two are actually carrying the Nasdaq here again today. Apple helping the S&P stay in the positive. Amazon doing some heavy lifting. Well, let's jump right in. Let's take a look at the heat map. Apple up nearly 5%. Amazon 2.5%. Tesla's been wobbling. This is the S&P 500, obviously. Tesla's been waffling around 10%. Semiconductors doing things. The Nasdaq went near unchanged, and then it came back, and now we're up about 1% on the day. But it's really not a broadly great session. Industrials all lower, financials all lower, energy lower. Walmart is a little bit of wind coming out of their sales today. Remember, Walmart pumped up last week on TikTok potentially being involved in that purchase, and Microsoft down on that as well. But you know what? We're hearing that the U.S.-China trade talks are going wonderful. No surprise there. Although U.S. and China, you're hearing in other parts of the news, China launching missiles in the South China Sea, trying to create a little bit of tension there, warning the U.S. don't come over. And now we're also seeing Beijing talk about they need to approve any sale of TikTok. So, although those trade representatives keep lauding that Phase 1 trade deal in progress and China-U.S. oil imports, well, you know what? It doesn't really seem like the other side of the coin. The market's not worried about it, but things aren't so great there. But all that matters is what we're hearing from the representatives, and we're seeing the tech side of things hold up really well. The market broadly doing well, and it's the big behemoths doing things here for the S&P 500. Again, the Apple up about 5% after it split. Amazon up 2.5%. Let's jump right in. I want to show you a chart here in the S&P 500. Now, this is a trend line that's been talked about for a long time. It's even drawn from the lows in 2009, where it broke out and really has not been able to get out above there ever since then. But ultimately, this is a resistance trend line. We hit it back in February of 2020, and we're right back up there right now. We at our Morning Express, we had that level 35.30, 35.40. 35.30, 35.40 is an area of rare major 4-star resistance. It's this trend line, really, what we're looking at there, and a couple other studies that do go into that pocket of resistance. So keep in mind there. But again, it's this big stocks, Apple, Amazon, all moving things here today. Where they aren't are the Russell 2000, and that's a very underwhelming chart. You look at this Russell 2000, it's got above 1600, really couldn't hold it at all, but you got support here. Now 1545, 1550, it's coming in there again a little bit today. If it breaks down below there, could throw some cold water over some of the broader market. But again, these small caps are not following. And then when you do have these record runs here in equities, you would imagine continued pressure in treasuries, especially with all the auctions. So this is, before we jump into the chart here, the 30-year bond, we did see yields rise over the last couple of weeks. We've seen them rise. Record supply coming out. When supply comes out, the price of treasuries, they're going to go lower, and that lifts the yield. So overall record supply, but guess what? No record supply this week to really keep keep selling in that and keep a bit of bid under yields. Overall, though, we'll take a look at this chart, and we're seeing on a weekly or a daily basis, we left some good tails here in this December contract of the 30-year bond. Got this tail here on Friday after that heavy selling all last week and after Powell. But you got a nice tail here again today, moving up really nicely. So here's a 30-minute chart that I did have up. And you got a nice little flag, little sideways consolidation, moved up sharply through there, and we do think there's some legs on this. Where you can see this run about 176 3/4 to the 30-year bond. So keep an eye out for that. Runs into some of that heavy selling on Powell on Thursday. And I want to cover some of the energies real quick. Crude oil. We were cautiously bullish last week. Really could not break out above there. A couple tailwinds from China purchases, the hurricanes, 5 straight weeks of inventory stock drawdowns, but it could not break out. So we're running into this March 6th gap, 42.92. Got the 200 moving average, 43.25, let's call it. Underwhelmingly breaking out above there. So where does it close today? We could be in store for a little bit of selling. We want to be buyers from well lower, but I do think there could be some lower move here. Again, very attractive from lower levels. The natural gas, so really strong move recently. Hurricanes moving it out above. The story has been we're not seeing the inventory is really underwhelming move higher ahead of these hurricanes, but the hurricanes is what gave the tailwind here, and some big long-term resistance at 270 market coming in, but you got a good channel here. It's responding up the bottom side of the channel. See what it does here. If it starts getting out above today's high at all into tomorrow, it could show we're ready to break out above 270, 275. So keep an eye on that there. Lastly, heading into some of the metals and currencies, I want to show you here gold. So, gold right here is ultimately holding very constructively out above this 2011 high. But this is a monthly chart for gold. Now, we're going into the month in right now, August 31st. We have a spinning top here in gold. Spinning top means the market's exhausted, ready to come in. So we are and continue to be cautious on gold. Now, if you followed some of the buy recommendations that we put out, I had put out 1910 was a big area we wanted to be buyers. We moved that even up to 1915. Both of those levels would have been hit last week for buys. But overall, we're also saying we don't expect it to break out back above 2000, holding really consolidated below 1985. It's up there, though. It's holding against there today. But listen, it's a trading range. Stay into this trading range. Continue to trade it. Again, you have a spinning top here in the monthly contract or monthly chart. That's raised for caution, and you know what? It can cool off a little bit. But listen, we're not bearish gold. We've been unequivocally bullish gold since August of 2018 when this thing was bottoming. But ultimately, too, where can you go out and find a metal that you want to sell? Platinum is that one that we think that is a little overdone. Now, platinum's responded from a trend line back in March very, very well, and it's unenthusiastically coming off of it. So, it's holding below this 382 retracement. 950 has been good resistance. If platinum can get below this trend line, you know what? There isn't a reason to think it cannot come back down to 860 or so. So keep an eye on that on platinum. We would tend to, if you're looking to fade something, platinum could be the one to try and sell rallies in, but you got good resistance here in gold at 1980 as well. So keep an eye on it. Just manage your risk because we could see these things run. They're in strong uptrends. Don't forget that. And we are long-term bullish these metals as we head into a seasonally softer time of year. Lastly, what else can move this? The dollar. The dollar index. This is the dollar index chart going back to that low of 2011. We're coming right into this trend line here. We've stuck our nose below 92 here today, but coming into this, 92 is a big support level. It's also a 382 retracement from that 2008 low all the way back up to that 2017 and really stuck its nose out. 2020 new high. Big support is in the 92 region. Watch that on a closing basis. We're here. We're here to help. Give us a call, 312-278-0500. Our team is ready to help you. A ton of different types of platforms we can work on. I use TradingView on these charts right here. That does link up to CQG data. You could trade from that. We have a number of platforms you can work with. Give us a call, though. We're here to help talk about the markets with you. We put a lot of research out on a daily basis, everything from the S&P and gold to cattle, as well as corn and softs. So give us a call. Again, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.